Want to be sure you're getting the most out of your retirement for all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now here's Jim with this week's Dollars and Cents tip.
You're starting to hear more and more now about the fiscal cliff that we're going to see in 2013, specifically the end of this year. This is something I've had my eye on for really over a year probably, and well, certainly since August when the budget ceiling on our national debt was raised. But we've got this fiscal cliff. You're starting to hear more about that. What is that, and what does that mean for you and me? Basically, we have four major things that are potentially happening at the end of this year on the federal side. One is the expiration of the Bush tax cuts, which if that happens would be one of, if not, I think it's actually the largest tax increase in U.S. history in the middle of what is a steady but fairly weak recovery out of the recession. Most believe that single point alone would plunge us back into recession. We also have a new debt ceiling debate that's going to have to be debated by the end of the year. The third thing is if we don't hit the budget ceiling issue and don't solve it, then we have mandatory cuts across the board, which would have a tremendously negative effect on our economy and would pull back quite a bit of money from our national defense. And then we've also got the payroll tax going up. We've got the alternative minimum tax going back up. We have the marriage penalty would be increased and some other tax issues that are in the works there that aren't part of the Bush tax cuts. So, you know, I think everybody's pretty much in agreement. Everybody I talk to, you here throughout the week, and then also those that are actually in administration and people I've talked to around the country. I'm very confident nothing is going to happen to any of these things before November, before the election. And what that means is we're going to have a 20-day session of Congress to handle these four things. And I would probably propose that any one of these things will be very difficult to handle in a 20-day session. And the problem, as I see it, is, I mean, both sides of the aisle agree that these issues need to be fixed at some level. The problem is, in order to fix them, they have to agree on what the change is, or they can't change anything. And we see what's happening in Washington. It's just a horrible gridlock and stalemate of people holding ground. And so it's just very dangerous. And, you know, I think ultimately they'll probably kick the can down the road. But here's what it means for you and me. It means that we're going to have very, very turbulent times in December, in my opinion. And we don't know where we're going to be coming out of all that. We would see an additional downgrade of our debt in the United States with our treasuries being downgraded. That's a legitimate possibility, I think. I mean, it happened in August last year. Nobody thought it would happen. It could definitely happen again. I think, again, as you've heard me preach week after week, is caution is the word of the day. Yes, U.S. stocks are attractively priced right now, but if you go all in on stocks, then, you know, you're really running a risk if things get really turbulent and we see a major pullback in the market. And unfortunately, most investment plans that I see, most of what many of you are invested in is this traditional allocation that we see of 60% stocks and 40% bonds. And the problem with that is a 60% stock to bond allocation, if you actually look at your risk allocation, where is your actual risk? It's actually over 90% stocks. So I think is having a diversified plan and in retirement, drawing income from the right sources so that when we have those blips and the market is down and maybe your portfolio's down, you're not selling and spending that money when it's down, that you've identified an income plan where you don't have to sell investments when they're down in value to spend income. So I think, again, as you've heard me preach for about 3 years now, we're in a new era in the United States of America. We're in the era of caution. 2007 into 2008, we ended the era of, I hate to say era of greed, but many of us look at it that way. Many of you look at it that way, but we're in an era of caution. And so I think you just need to continue to be cautious and identify what is it I really want to accomplish in retirement. One way to look at it is what's the least amount of risk you have to take in order to achieve your goals, rather than what's the most amount of risk you're allowed to take and maybe still be able to meet your goals. Because ultimately, would you rather be rich or know that you'll never be poor? And make sure that you never have life left at the end of your money.
And that's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.